Inflation is rising again. CPI measures in the Eurozone have shown very concerning elements. And more importantly, it's been very, very aggressive in terms of the increase of the core inflation figures. We have not seen these levels of core inflation for at least 3 decades in many countries, and what it's showing is that the economy is weakening significantly as inflation progresses. On the one hand, we need to understand that wage growth in the Eurozone is not even remotely similar to that of the United States. So, in real terms, wages are falling in both the United States and the Eurozone. However, in the Eurozone, it's worse. It's also extremely important to understand that producer prices are rising much faster than headline CPI, and that this is inevitably going to lead to further price increases in the next months. Demand destruction is starting to appear. GDP estimates for France are showing a negative reading for the quarter, and more importantly, we need to look at the risk of stagflation because it's rising, and it's rising very, very rapidly. The combination of destruction of savings, which according to JP Morgan are below pre-pandemic levels in the G4 economies, plus the reality of weakening gross margins for businesses who are suffering from higher costs than the ability to generate some revenue. All those things are hurting the economy. The European Central Bank, therefore, has to accelerate its path of rate hikes. It has to reduce immediately the repurchases of sovereign bonds, and governments need to reduce government spending, which has been one of the main causes of the artificial increase of demand generated throughout the reopening of the economy. Lower government spending, end of repurchases, and rate hikes are absolutely critical to reduce inflationary pressures. Remember that inflation doesn't go up in everything with the same amount of money. So we need to pay a lot of attention to this because the Eurozone was already in a weaker recovery than other economies and is finding itself in a much weaker position as well than initially expected.